we've been in a high rate environment for 30 months now. And the rate environment has essentially doubled, more than doubled for 30 months. And to think that the real estate market has not completely crashed in 99% of markets in the country has not completely crashed. In a lot of markets, the real estate pricing has maybe come back 5 to 10% over the last 30 months. And the rate environment, from a cost of capital perspective, has more than doubled for 30 months. So think about the fundamentals and what that means from a macro perspective, right? We have a lot of shifting demographics going on right now. So the baby boomers, we just mentioned them. Baby boomers are living a lot longer now. And so they're not selling off their homes as early as they once were. And they're not going into retirement homes as early as they once were. And then you got the millennials, my demographic, who are starting families for the first time. They're buying houses for the first time. That's a huge tick up in demand. And then behind them, you got the Gen Zers, which is even larger than millennials. And they're moving out of their parents' house for the first time and looking to rent apartments, right? Now, on the supply standpoint, in 2020, we had a huge major tick down in supply. I'm sorry, in housing starts, okay, and multifamily builds. And rightfully so. There was COVID. If I was a builder, I wouldn't want to build either. And then 2021, a lot of people realized, oh my gosh, there was no recession and the world just shut down. The Federal Reserve just printed 80% of the money supply. Well, all that money needs to go somewhere. And yes, a lot of that money is off of the playing field right now, and it's in long-term government bonds. You can get 4% risk-free in a CD. So a lot of that money is off of the table. Now, from the supply standpoint, think about this. The housing starts in 2023 and 2024 are basically an all-time low because of the rate environment. There's a lot of uncertainty. There's been a lot of bad news in the marketplace over the last 30 months. So I get it. If I was a builder, I'm like, maybe I don't start a new build right now. A lot of these projects take 3-4 years to build, especially these larger multifamily deals. And so I say all this, and that housing starts are at an all-time low. There's already a 5 to 6 million housing unit shortage in supply to meet the demand right now. This is countrywide. I've read a lot of articles. Most of them say 5 to 6 million housing units short. Now, Pace Morby and Grant Cardone talk about this all the time. This does not include the 25 to 30 million dilapidated homes in America that are not rentable, they're not bankable, you can't get a home loan on, that no one can even live in. So if you really take into account all of these houses that are not livable or rentable, really about 30 million housing units short to meet the demand. And that's why, even though the rate environment has more than doubled in the last 30 months, we did not really see a tick down in pricing. And so this bodes really, really well as you look at the next 4 years. And as you look at the Fed, they just came out and announced that they're going to do a couple rate cuts. That's big. I think these rate cuts are going to continue over the next 12, 18, 24 months. And so I'm actually really excited. I think we're going to continue to see more inflation. The government's just going to continue to print money in the long term. And like I said, do not forget, the Federal Reserve has printed 80% of the money supply, guys, in the last 4 years. Okay. That money's going to come back into the playing field, and that money needs to trickle down and needs to go somewhere. It needs to find a home. And so if you're out there thinking we're going to see this big real estate crash, guys, I'm telling you, it ain't going to happen. And I'm telling you right now, in 10 years, 12 years, 15 years from now, you're going to look back and be like, oh my gosh, I should have bought that good deal in a good location in 2025. And I'm not saying go out there and buy a bad deal. I'm just saying, look, in 9 months, 12 months, 18 months from now, the bad news in the marketplace is going to be gone. And there's going to be a lot more buyers that are on the sidelines over the last 30 months that are going to be in the marketplace. And so if you're out there right now and you're wondering why you don't have a good deal, or if you're out there you're looking to buy your first real estate deal, I'm telling you guys right now, this is the time, because right now there's still bad news in the marketplace. There's not a ton of buyer demand. You can go out there and negotiate good deals in good locations. And there's still some sellers out there that need to get out of deals. And so I'm putting this out there right now, Tyler. And I'm always speculating. I'm always willing to be wrong. Always willing to be wrong. But I'm putting this out there right now. I think these next 3 to 6 months, no, fuck it. I'm going to say these next 3 to 4 months, if you're looking to buy a good deal, this is the time to strike, because in 9 months, 12 months from now, even summer of 2025, I'm telling you, it's going to be fucking crazy out there, and you're going to have a lot of competition. And you're going to wish that you locked up a good deal back in November, back in December of 2024.
Okay. I totally agree with that. I absolutely agree with that, because as soon as the good news starts to get even, and I want to drill home on something, but as soon as the good news starts to outweigh the bad news, then you have people flood in. Well, you already want to be in the market when that happens because then it compresses cap rates, which drives up your values. And if you notice something about Rich, Rich is very confident in what he's saying, even though everything, the news and all these things can be so negative. Rich is confident in what he's saying. He's confident in his execution because he's actually done the research. He's actually looked at the facts instead of just been fed into whatever story somebody else tells him. He actually does his research. And that's where I wanted to lead this question. If there's somebody listening to this, they're in the game, or maybe they've been in the game, they're on the sidelines, or they're thinking about getting in the game, but they're on the sidelines, or let's say that they haven't even started, okay, and they're wondering, should I? Where would you tell them to start? Like, knowing what you know now, what would you tell them? An actionable that you would give them?
If you're starting out right now and you're looking to buy your first real estate deal, first educate yourself, and see what asset classes or what types of real estate are going to be aligned with your real estate investment goals. There's 100 ways to make money in real estate. Now, where I see the most potential as I look out through 2025, if you want to make $1 million through real estate, the three investments or areas of real estate that I would get into if I want to make $1 million in 2025 and become a real estate millionaire, either by adding $1 million to your net worth or making $1 million cash through real estate, would be these three things. I would say number one, and this is probably the easiest path for the everyday person to make $1 million in real estate, and I would say is get into ADUs. ADUs right now in expensive markets, especially in the West Coast, Seattle. Thatch Game was just on the podcast. He's talking about it. This is a big play right now in California, especially Los Angeles and San Diego, in these big expensive markets, because there's a shortage of housing. And because it's very, very hard to build in areas like California, and shoot, Hawaii's got a lot of bureaucracy and red tape as well. And so maybe Hawaii, there's a play there. But I know in California right now, I know in Seattle, all these expensive markets along the West Coast, there's a huge shortage of affordable housing. And so the government, the local municipalities have come out and said, hey, you can legally build ADUs, accessory dwelling units, in the back of these residentially zoned properties. And sometimes you can pick up a single family property with 3.5% down on an FHA loan, go get the permits to build an ADU. Sometimes you can build up to 3 or 4 ADUs in the backyard. And because the price per square foot comps in some of these expensive areas of Southern California and Seattle and the Bay Area are so expensive, $700-800 a foot, you can build at $300 a foot, and you can pocket on that spread. You can pocket on that delta, and that's a way to force a lot of appreciation with the ADU space. So that's number one. Number two, I would say get into value add commercial real estate. Okay. You don't need to do a big, massive 100 unit, 200 unit deal. But I'm telling you, you can go buy a fucking eightplex on the multifamily side that's underperforming, and you can renovate the units, reposition the property, and force a lot of appreciation. I've done it on the multifamily side, and you don't need to do big properties. Shit, my first deal was 11 units. I bought that for 350. Today it's worth about 850. My second deal I bought was a 32 unit complex out in Indianapolis. I bought that in 2019 for 1.1. We renovated 50% of the units. We sold it 24 months later for 3.1. We almost a 3x
Let's
on the value,
go.
right? In
Yeah,
24
that's
months. That was my first big win as a real estate investor. And that was in a relatively short amount of time. And so we're doing that with the hotel stuff right now. So like, the first hotel I bought, 10 units, beachfront up in Northern California, bought that for 1.5 seller finance. The seller had owned it for 18 years, mom and pop, and they never exceeded $180,000. In 12 months, we took the 180 to 600. We took the value from 1.5 to 4.5. We tripled the value of the property in 12 months. We did a cash out refi. Now, look, we're doing that with all the stuff right now. The 44 unit, the 44 unit boutique hotel that we bought last in April that you're a part of, Tyler,
Mm-hmm.
the Bodega Coast Inn and Suites, now going to be Hotel Dega, Sonoma Coast, waterfront, wine country. That property was built in 1988. And this is when I talk about, hey, baby boomers are retiring. This is a perfect example. That property was built in 1988. It had never traded. The son took it over. The father had passed away 2 years ago. The thing started spiraling out of control, had poor management. And the son said, hey, let's list this thing, but I don't want anyone to know that we're selling it. The broker shopped it off market with just a couple buyers. We got in there. We were able to lock this thing up, bought it. We stole this thing. We bought it for 6.9 and a quarter. Okay. This thing appraised as is 10.6 million. It has a stabilized value. We're putting $2.2 million into a renovation right now. Has a stabilized value of about 15 million, right? So think about that. We bought it for 6.9, and in 12 months or less, it's going to be worth $15 million. And this is why I say value add commercial real estate is the play. Once you learn how these things are valued, right? And this is why I skipped residential real estate. I went straight to commercial. The income approach, NOI divided by cap rate equals value. Once you understand that formula, and you realize the more I can increase the income, the more I can decrease the expenses, the more I can control and force my appreciation, the sooner you can learn that, the sooner you're going to probably get out of the residential stuff and get into the commercial stuff. That's really where the play is. And then the third way, which is going to be residential. If you guys don't want to jump in the commercial side, I would say find some underperforming higher end properties in high growth areas like Scottsdale, Arizona, and you can buy these properties that are tired, do a nice renovation, but these got to be in expensive areas, and you got to buy them right. And if you do it right with the renovation, you can add a lot of value in these nice higher end flips. We're hosting our holiday event this December 12th at a 12,000 square foot mansion. My buddy bought that property for three and
I
a half.
saw some posts on this. This
Yeah.
thing looked awesome.
My buddy
Yeah.
bought the property for 3.5 million. He put 3.5 million into it. He's all in for 7. He's got an appraisal for $12 million. So think about that. He added $5 million of equity to a property in about 12 months. And so I did it with my Scottsdale luxury rental, and I was just looking at this deal. I'm gonna put out a piece of content on this thing probably tonight or tomorrow, Tyler. I was just looking at the freaking P&Ls. I'm like, this luxury short-term rental that I 1031 exchanged into in early 2022. This is one fucking property. This thing has $731,000 of gross revenue on the books in this year. I'm gonna hit 750K by the time the year is over. I'm like, I need to talk about that. People are talking about, oh, Airbnb is dead, and I agree that Airbnb is dead in a lot of markets, and that's why I'm buying hotels. But if you can buy the right fucking Airbnb, especially on the luxury end in the right market, you can crush right now. So that property at 1031 exchanged into $2.4 million in early 2022. I put 800 in. I was all in for 3.2, and that thing appraised 12 months later for 4.89. And this is the other way that you guys can add a lot of value, is get into a nice luxury property and add a lot of value, but it's got to be in the right neighborhood. You got to buy it right. You got to have the right contractors. But if you can do all those things, you can either flip it and get out of it and make $1 million cash, or you do what I did and you refi and hold it into a long-term, short-term rental. And it's a way to get a lot of depreciation and a lot of tax flow. But I would say if you've never done it before, get with someone that's done it before.
So good, dude. I asked this question and give some actionables, and you just go wax poetic on them, bro. Like, those are, anybody listening to this, like, go take notes, man. Those are the actionables. And how do you know which one to dive into? Well, dude, do exactly what he said. Go get educated, figure out which one resonates, like, and then make a decision. And know that the decision is never, that's not the finite thing. That's just the fucking beginning. Then you're going to make 1 million micro decisions after that, and you can always pivot and move. But you can move.
And that's beautiful.
You can move. So to recap, ADU, I think, is one of my top 3 favorites. Value add commercial real estate, and then flipping or refinancing and holding a luxury residential property in a high growth, good neighborhood. Those are probably my 3 favorite plays for 2025, and I think anyone could get into any of those 3. The key is, we can give you all the secrets, we can give you all the information, but it's on you to take action, and those who take action play the game. You can't win the game from the sidelines.
That's it, dude. Okay, let me give you an example of this. There's a lady who I just talked to, man. I was out in Fiji, and she was telling me that she took some of Pace Morby's stuff, talked about creative financing. I love Pace too. And he talked about some ADUs briefly, but she was familiar with it. She went, but she didn't have her own money to go, or her own property. And so she was struggling to find properties that would be willing to sell. So she pivoted, and she would start pitching to these sellers, hey, I'll come in, I'll build this additional dwelling unit on your property. We'll rent it out, split the cash flow, drive equity up. And then if you ever do decide to sell, then we'll, split the equity just on that portion. And she's been able to negotiate a handful of those deals over the past few months. This is not even any of her own property. She's partnering with the property owner to help them drive value on their single family residence. Super cool.
Super,
I
super
love
cool.
that. I love that. And she's being creative and
Yeah.
she's thinking outside the box. And guys, I'm telling you right now, like if you're listening to this and you're like, oh, I don't have any money. I don't know where to start. Must be nice. Guys, I had a fucking $320,000 401k in 2019. I did my first two multifamily deals and I was out of money. And I could have sat there and stopped and been like, I'm just going to sit on the couch and I'm going to go work my air traffic job. But guess what? I got creative. I learned how to raise money. I got creative. I learned how to find good deals. And I'm telling you guys right now, this game is all about two things. It's about deal development, access to good deals, and it's about capital development, access to capital, right? And so if you can solve those two problems, everything else in this game you can delegate out, you can hire out. And if you can have those two things, I'm telling you right now, the highest value skill, Tyler, is the ability to raise and multiply capital. That is the highest value skill in the
Mhm.
entire world. And so if you can figure out the financing piece and get creative, if you can figure out how to raise private capital or even attract private capital through social media, personal branding, podcasting, that's a whole nother conversation for another day. But if you can figure out that stuff, I'm telling you guys right now, that's how you can really scale and you can build a lot of net worth over and over and over. And I'm telling you guys right now, once you learn these skills, you can go out and repeat this process and do it over and over and over. And obviously the conditions change, right? The conditions on the playing field change. And that's what we saw over the last 30 months. And we're going to see it again over the next 30 months. But those who play the game win the fucking game. Those who are on the sidelines never win the game. You can't win the
That's
game if
it.
you're on the sidelines.
You can't win it, bro. Not even some people aren't even in the arena. And so, dude, you talk about, I want to talk a little bit about your personal brand. And you talk about diving in and getting into the game, which is beautiful. And then, your journey and what you've been able to accomplish, which is unbelievable as well.
I
Oh,
want to talk about your personal.
we're just getting warmed up right now, Tyler. This is just the fucking beginning. Like
God,
all
this
this
is what I
shit's
want to point
great.
out.
All this shit's fucking great. I'm like, oh yeah, it's cool. Like I tell the team all the time, I'm like, guys, this is cool, but like this shit doesn't even get me out of bed. Like I haven't accomplished shit yet. And
Hmm.
to think that 5 years ago I knew nothing about business, nothing about real estate, and to think that we are where we are right now, it really shows you how low the fucking bar is, right? And
Yeah,
I
bro.
see all these fucking people out there who are putting out content, real estate entrepreneurs, all this stuff, all these people, and I'm like, we're gonna run these motherfuckers over one day. I'm like, this is just the fucking beginning. They don't even know. They don't even know.
Mm-hmm. You tell him, listen, this is why you join his mastermind. Because you're telling me that you don't surround yourself with somebody like this on a regular basis and he doesn't drive you to do more, to think bigger. Like you're out of your mind, man. You're out of your mind. That's why you join his mastermind, because as the environment changes, you change and you grow, and then you also realize that mentality of like, and bro, that is my mentality. I look around at people and I will be honest with you, I look and I'd be like, I should be bigger than, like, how am I not bigger? And it's not like a comparison, like like I feel it's like a motivator of like, no, I know who I am. I should be bigger. I should be bigger. I'm going to be, and I will. And it's a long-term game. And then all of a sudden you look back and you're like, yeah, fuck, let's go, because you made a million decisions and you kept on moving. That's why you join this dude's mastermind, is because and how you raise capital. Let me give you a little snapshot. Watch what he does. Watch how he talks. He's not talking about a specific preferred return. He's talking about what's happening in the market. He's talking about his strategy. He knows what he buys. He knows why he buys it. He knows how to execute it. That's how you raise capital. So if you don't have capital, you need to learn how to learn the most valuable, high value skill out there, which is to raise. And he said multiply, raise and multiply. There's a big differentiator there, and you need to be able to do both. And this dude knows how to do it, man.